All right, good morning, everybody. Sorry, apologize. A little late. Just making some breakfast. All right, where we at? Where we at? High impact news at 10, so not until then. We'll wait till then. Let's see, we're gonna look for... what do we like? Yeah, that's a good question. That was from our video yesterday, catch the high, which was nice. Huge dump. Honestly, I like... we did get above the 4. Let's see how the 4-hour closes. If we can close inside this 4-hour here at 10 o'clock, I'd actually like lower prices again. Relative equal lows. Okay, yeah, we'll see. If we end up inverting, we'll go higher. If we can displace underneath this 4-hour after clearing short-term highs, I like the idea of trying to rally, clear out some shorts. A lot of liquidity here on the way up, right? Trend line liquidity. Once we make this low, higher low, higher low, higher low, higher low, equal lows. We do run that, but relative equal lows. Yeah, we'll go shorts. Potential right here already. Inversion play. As we say, if we're going to, we clear a short-term low, we then displace outside of the higher time frame with a 1 minute. That's often an area that would hold us bullish. Now that we close below it, I'd expect that offers us some type of resistance. So maybe we continue to trend lower heading into the news here. Out of sync, yeah, a little bit out of sync. It's one of those tricky days, right? Because we've already cleared previous day's low. Pretty large overrange or overnight range. If we have a large overnight range like this, the morning tends to get a little bit choppy. Especially because we're going to be right at equilibrium of that range too, which leads me to believe that we may kind of fizzle out. If I bring out the midpoint, let's see what that's going to be. Yeah, so pretty much we're just consolidating after we create this huge leg. Or trace up into its midpoint, consolidation now. So yeah, honestly, I still like that idea. If we can displace at 10 o'clock, we get some type of movement lower to break through lows, leaving the 4-hour. We'll look to try to utilize that. For the time being, this would be a kind of an opportunity heading into news, right? The inversion. See if that just wants to offer us some short-term resistance. 4-hour consequent encroachment is kind of what I would expect. And then if we're just going to continue to want to be range bound, equilibrium paired with this fair value gap, so I'd look for that for sure. All right, so making a move towards that. As we said, fair value gap is also equilibrium Also midpoint of the 4 hour, so that just seems like a very strong magnet on price. We should dig down into that. Nice. So we do get that delivery straight in the low. As we say, if we're going to close below this bullish fair value gap, that'll become an inversion. Hold just gives us a slight run lower. Miss you short. That's all right. Like I said, I don't really like to get in front of news anyway, so if it goes lower, you miss it. That's fine, brother. Plenty of other opportunities. What's first percentage for today? So first percentage up here paired with, okay, so we have overlapped first percentage. Okay, so let's see what we get at 10. We didn't trade into the opening range gap midpoint. I'd like to see that if we're going to start breaking lower. So let's move that high impact news. Let's get moving now. See what we get. Mm-mm-mm. 10 o'clock, we hold that perfectly, accelerate up into the bullish. Let's see if we leave the 4 hour here. With this being the first movement, don't mind that because that could be the false move higher. First percentage here. One minute inversion. So yeah, same idea. If we were to like break from here, right, that would be the original kind of Judas swing news to return into the inefficiency. Look how perfectly we've delivered into the high of that inversion. So if we hold this, break lower, I don't mind trying to take that short. Just into some lows. Like to me, let's go to a 5 minute. This low here has my attention. Aside from that, all this trendline liquidity. Morning, Sharky. What's up, dude? So understand that's the inside of the 4 hour right now. Simply looking at this inversion though. Let's go, let's go. Yep, see what we get. Probably just hang out for the silver bullet today and then call it there. Headed out of town for the weekend, so gonna pack up, make sure the crib's clean before we bounce. So far that's holding nicely. We'll see if we break down from there. As we said, that would be like the Judas swing, 10 o'clock, false move higher. Can't even get into first presented after inverting and holding, so that's gonna be pretty heavy. Holding the low of the opening range as well because we've closed below that. So yeah, I just want to see if we can't hold for lower prices here. You could almost even, if you're going to trust that this is the protected high, don't know if I'm that confident in it just because we're right at equilibrium. So a little bit less likely to be pulling the trigger here. Cool. But so far up, continue to watch 830 paired with the bullish turned inversion. That's going to be our area of resistance. Small 1 minute fair value gap in here. So we want to see how does price interact. If we close below that, it'll lead price to continue to fall. If we're going to kind of respect that area, especially because it was a BPR, right? So we create the bearish fair value gap. We then create the bullish in that place. So if that wants to hold us bullish, right, that's where we would expect that. Look for the acceleration. But I think this inversion will be pretty strong for us. Take a look at NQ now. NQ just kind of playing around within its first presented, so not too much action. Still a little bit choppy in here. We didn't close below the first presented, so that's still going to be an area of support for us. Which means if that starts rallying in NQ, reaching for highs, we would kind of expect ES to follow suit potentially. Conversely, if we were to get back above this bullish fair value gap, I think that would be more bullish, right? Because now this wick being traded through, breaking structure at the high, holding the discounts while returning into the 1 minute inefficiency. Slow opening though. It's also a 5 minute inversion, right? So that's why I'm kind of also thinking that we'd rather favor shorts. 5 minute inversion. Like this is already, to be honest, a valid area. If you wanted to go in like just right high risk, using the high, the 4 hour paired with the inversion as well. See if we get the release. We hit the high, that 4 hour, retesting the BPR. You can see that we're holding that pretty aggressively. As we said, if we can close underneath that, that should set the stage for that lower price delivery back into 4 hour consequent encroachment. And then we can start aiming for lows. Okay. Not surprised here, as we said. If you guys have been around for quite some time, even the last week or so, we've said how we can kind of expect consolidations in the morning. One of the things we would look for is large ranges overnight heading into the morning session. That clear previous day's liquidity, right? That's what we got here. Asian clears sell side, delivers all the way into a new week opening gap. And now we have just that slow grind higher. So I wouldn't be surprised if we did get a little choppy here. We do have a lot of premiums now, right? We're kind of starting to stack first presenteds. So if we're going to overlap a lot of PD arrays in one area, that's also where consolidation is going to take place. For the time being, we'll see what we get here. As we said, if we were to get above the original 1 minute, I think that sets the stage for continued bullish delivery now. Into the high, potentially at least. We do have these first presenteds that will be somewhat heavy resistance, but simply following. We'll move to 4 hour. Still respecting that. New swing low once again. We're putting the low, higher low, higher low. To me, that's indicative of wanting to run those lows out quickly. Now that we've hit midpoint of the inversion, we'll see. Midpoint of the wick as well. Very true numbers. Not an easy read for sure, right? If you're new, even if you have experience. This really requires a lot of focus, a lot of precision, which in itself is a signature that just low probability markets. Right, as we say, when we're moving pretty clean, it'll be very easy to spot setups. They really jump off the chart. So if we're going to do that, hit midpoint, close below, I want to see if now the low of this can offer us some resistance. We come into the high of it, we close below it. We come into the quarter level, close below it, and now we've wicked into its midpoint and close below it. So if we're going to keep doing that, we want to see this now continue to be respected. Especially because, as we say, that's the 830 level as well. So for me, if say that we can get below this fair value gap, we displace. I wouldn't mind trying to re-enter maybe on a test of that. Stop above the 10 o'clock swing point to just target the low of the 4 hour, something simple. So 1 to 2, could even go here, 1 to 2, just for the low. But that would require this fair value gap being closed below. Until then, we're probably just going to keep chopping and no need to cause unnecessary damage. You don't understand the statement where you say around this time we can expect overnight runs. Well, the understanding is that in consolidations, right, it's not going to allow people to be involved in the best moves. So during the daytime, you're going to get a lot of this, right? Like yesterday we caught longs, which is nice. But even then, consolidation, we had one nice run, which we took advantage of. But then since then, the afternoon was once again just terrible. So what we expect in these type of conditions is that, right, we have this price action because it's not allowing anyone to be involved. Or if someone is involved, they're getting frustrated because they're spending so much time back and forth. And then once the market closes, right, the overnight session comes into place, that's when we get the release. And you can see it goes perfectly into that sell side there. Right, so this whole purpose is just engineering liquidity and then running that liquidity without really allowing anyone to capitalize on that. And that's kind of what we expect when the markets are very choppy, right? It's happened a few times already this week, large overnight moves. And that also leads into the next point, which once that happens, that's why we expect the morning to be choppy. If we're gonna have a large overnight move, the next morning will tend to be a choppy morning. Add to the fact that it is Friday, right? So it's the end of the week. It was CPI week. Makes sense why we're seeing this. So still want to see, can we get below that fair value gap? We've played it again. I do like, as we said, if we are going to respect and deliver bearish, as we hit the consequent encroachment, close back inside the 4 hour and close underneath, we would expect the low of that to be what wants to hold. It does. So now I want to see if we can close below this. We might bounce off the 4 hour. But just wanted to see if we can get below the 1 minute here. Which if we do, as we said, I don't mind trying just a little short here, using the original. And because we are trading like this, right, these are where I tend to miss moves if it starts to run, because I like to wait for retracements, expecting the choppiness to continue. So I want to see the confirmation first, which is us closing underneath the bullish, and then I would look for the retracement entry. If we're just going to run though, right, like I say, we leave a fair value gap aligned with the 4 hours consequent encroachment like this, that may be a pretty key area that actually wants to just hold price lower, send it lower. So we're retesting midpoint, right? We would expect if it forms perfectly with the 4 hours consequent encroachment, this fair value gap will stay like it is here. So I'm kind of watching to see if that is what takes place. Because if it is, we could even maybe build a position. Right, that's what I kind of do in choppy markets as well. So you just put one here. That way, if it does go up into that consequent encroachment, you can still be involved on a run lower without having the full entry. But if it returns to where we want to get entered, that's when the full entry can pretty much be added. So instead, we're just going to use that consequent encroachment. We'll see if we just want to break now, break quickly from there or not. Well, at previous day's low, right? So that's what I'm watching, because I'm thinking if we can't hold from there and then get the retracement, but if we fall through that, we should continue to fall as well. back to midnight. Maybe, yeah. We have some lows near the midnight level, but like I said, I don't know if it's going to want to be that heavy. For us, our kind of lows would be these ones. And then, yeah, if we did want to remain heavy, as we said, we do have nice relative equal lows right here, aligned with that midnight. So we'll see if we get this entry. As we said, watch this fair value gap. What we can actually do, as we said, we'll kind of explain how we do that. So if we're going to build one in, you would just add one at a key area like this, right inside that inefficiency. So as we're inside the inefficiency here, if we're expecting that to hold us, we could add one, and then the original stop would be here, and I would modify my actual order to be only 2 now, so I wouldn't get the full position, but right, this allows you to get the low hanging fruit entry, the low barrier to entry, while still allowing for a deeper retracement and still maintaining the same risk. So like, right, if we hold from here and then we just run straight into, honestly, just the low of the 4 hour, like, without giving us another entry, we'll just get out. But I like the idea of trying to come back up into this, right? Look for the continued choppiness. Yawn, yawn. Short from, oh, nice. Little pre-news action. Hopefully you partialed already, or no? Partial with the low of the opening range is always smart. 830 as well, right? If we're going to overlap areas like that, 830, opening range low, fair value gap low. That's good though. If we can hold that as well, right? That'll break lower. Should hold an ES, break lower. This becomes sell side. Still waiting to see for the closure below, as we often say. Need 2 candles. 1 minute here closes below previous day's low, but next candle immediately rejects, especially because we're holding this last little down close OB that was created. So you'll notice that as we displace above the previous day's high, we have a fair value gap. That's going to be a strong area in price. That's why we see price stalling here. So conversely, right, like, if we're going to look for price to go lower, we would expect price to hold from these discounts, consolidation, some type of maybe bounce even, but then you'd want to see the old discounts get invalidated and turn into premium arrays. So use them as inversions on the way down. For now though, just using it bullish. As we say, key area in price, that's a daily low paired with the breaker, paired with the bullish fair value gap. So we're overlapping PD arrays here, paired with 4-hour consequent encroachment. Right, we'll point all those out for you. So we have the breaker here, low, high, lower, low, displaced above. That's the breaker. We have the 1 minute fair value gap already labeled. We have the OB. We have previous day's low. And so you can see all the discount arrays here being stacked up, which is why we just run into this hesitation. I'd like to see it fall through. If not, hold from, as we said, opening range gap low here, where we'll try to re-enter with the full position if we can get up there. If not, we'll just take the small win on Friday and call it there. Not necessarily true, Winston, because price will consolidate all the time. Right, you're not expecting price to move quickly in a choppy market like this. So you've had multiple times throughout the week where price will consolidate near lows or inside of inefficiencies and then break away from those inefficiencies and run higher. Kind of like yesterday. Especially because it's at a key area in the form of previous day's low. So the higher time frame PD arrays, those time-based PD arrays are going to be important. Because right, consolidations are expected as we clear lows. So as we clear a short-term low, and especially returning into the higher time frame key area, we're expecting consolidation to occur. So far, holding the swing high nice. We didn't get the swing high entry. They're hating on us for that. Still waiting for a closure below. I want to see a closure below previous day low. That's what the issue is right now. As long as we're above that, we can continue to pump. Once again, notice that the type of delivery here, when we're creating higher lows. So like as we create runs lower, if the original swing that gets created ends up being the actual swing, and what I mean by that is like from high to low, if we create this leg and we don't put in another low before we retrace, instead doing something like this, right? Just putting in a low and then retracing and then creating higher lows. That type of delivery is a lot more inducive for a quick fall through, right? Whereas if I see something like this, where like we put in a low originally, and then we get a quick short-term run of that low before price starts going higher, that to me is a little bit more bullish, and we do have a chance of kind of running higher. So as I look at this price delivery, right, I see that the original leg lower, that low is the original low, right? So we don't come and sweep that low, and that's why as we create these higher lows now, we can fall through that with ease, just as we spoke about. But now even on this leg, right, notice that the original low is this candle here. And ever since then, right, higher low, higher lows, higher lows. So I'd like to really see that same quick fall through to get into the sell side or to close below previous day's low, which would then act as a potential area of resistance to get price back down into these objectives. So I'm always kind of thinking about things like this, about the market structure and how it's supposed to be moving. And once you get proficient with the concepts, that's how you'll be able to kind of read as well. So far, just getting stuck, as we said, inside the bearish here. Once again, choppy. You just commit to the idea though, and let it rock. All right, so for us, sell side, and then exit is actually the 4 hour. Let's go one tick above that. Oh yeah, I'm almost like a purely ends model guy, to be honest. That's what I make my bread and butter off of. 5 handle moves, consistent base hits. I like that over, right, large windfall trades. Okay, so let's see if we get that sell off. As we said, on a Friday, like you really could just aim for 5, which would get you. You wouldn't even need to sell side. That's another good thing about the ends model, is that this low aligns with 5 handles. So you could easily close there. We're just going to close there, sell side. Boom. Easy. We'll probably run into the low. But as we said, for us, we could always find another entry if we want. For me, I'm content with that. Easy. So right into sell side. Now we see what happens here from sell side. Like same idea, right? What did we say? If we're going to put this low, retrace, we expect quick falls right through those lows. That's exactly what occurs. So we're just going to continue to follow this now. If we do have another bearish fair value gap, and the low that gets created here maintains, and we retrace into that, that is where we would expect price to hold again. There's the 4 hour low that we were speaking of. So we still get exited on that same candle, which is nice. So from this time, that right there is already kind of important, because that is going to be a wick, right? So we can't get the closure below the external range. Now we want to see if we leave a fair value gap. If we can't leave a fair value gap aligned like this, we won't really expect this to hold. Okay, so I'd actually look more for an inversion play off this now. We got our shorts, we catch the swing low. I want this to invert. If we invert this bearish fair value gap, get back above previous day's low again, then we're actually going to go ahead and take that long with the new low being here, back up into just a 4 hour high, right? If we're going to consolidate, we use the 4 hour low up into the 4 hour high. Keep it simple. That'll be what we aim for next then. Let's go like this. Broke below that, so that's going to be another area of potential inversion, right? We came into it once, we hold, we bounce, displace through. So as we said, I'm fine not chasing anymore. We already got our shorts. This is where price will maintain bearishness and continue to deliver lower. So if you want to add a short, it'd be from there. I'd rather try to capture a reversal with the expectation that price just wants to consolidate, cause max damage, and not actually trend. If that's the case, right, we invert, go back into the range. So I'll wait for that. And if we break down and keep running, I'm fine missing it. Year night, thanks, sir. Just experience, man. A lot of hours. This was my life for 5 years. ES VWAP is also sitting below that sell side. VWAP, okay. Can't lie, not a VWAP guy. Don't really believe in that too much. But if it works, right? Don't mess your system. Yeah, we'll try this. I mean, right, that's exactly what we said we would expect. So if price is going to deliver as we would expect to see, I don't have an issue trying it. Closure above, and we reclaim that fair value gap too, actually. So I definitely don't mind trying that. Same idea, stop now below that swing point there, and we'll just come back for the high of it. We're keeping it simple, as we said. I like 2 there. So simply using the higher time frame for entry. 5-minute wicked it, 15-minute wicked it, 2-minute wicked it. So we'll see. We should be wrong quickly here, which is why I don't mind this either. Like if we do want to maintain bearishness, OB, original bearish fair value gap, as we trade up into that 4-hour consequent encroachment, very key area in price, should hold and run straight lower. But we're going to try to capture pretty much just a quick counter trend trade idea. So for us, we could partial at this swing point because that would be 5 handles if we can get up there. I don't like that we closed below that. So like as we got above this, I would have wanted to see this original inversion hold, which it is, but it already kind of retraced a little bit deeper than I like. So as I see this, right, this candle confirms closing above. We want to see the next candle also confirm that. Instead, it gets back below and now it opens with the bearish volume imbalance. So immediately that throws me pretty much out of this trade. Right, that's how we can follow order flow. That's how I go about determining the likelihood once we're in. If this truly was going to run, we should have held previous day's high again as we closed above it. So from now, we need to hold pretty much this original liquidity. That would be the last line of defense, right? The purge and revert as we trade back up into that. And that's why our stops below that very key area, very specific level in price. It could make another pass into that original sell side and then run. So I would need to see price make an attempt to get above, right? I don't want to see price continue to hold below previous day's low. If we do that, this is in trouble. And to be honest, I would not want to see this low attacked. If we're going to come back for this low again, we'll probably come back for this low. Holding previous day's low now is the key area in price. On a 2-minute, there's really not much. 2-minute up here. Yeah, we may fall through that. That's fine. Let's see. 5-minute wick. I don't mind that. Let's see. See if we can't get a little quick short-term retracement. As we say, as long as we're maintaining below previous day's low, to me, that's not a good sign. So we need to get back above that, start respecting that, especially because this 1 minute's fair value gap, right? Its consequent encroachment is aligned with previous day's low. Does it make sense to move your stop loss to the last bearish candle low? Yes, right. So you're short NQ up here, like for me as I'm following this, right? We're trading lower. Say you have an objective here. For me, my stop really would be like this candle. So it might be a little bit higher. An aggressive stop would be this candle because we did break lower. So we hold that premium, we break lower, we retest that premium again, and now we've displaced away, breaking outside of the opening range. So if we are going to start flipping bearish, that opening range low should hold us, which means for me, I'd feel comfortable having my stop inside of this fair value gap as we continue to print lower prices. It's also previous day's high, right? So it'd be like right above previous day's high. I can't remember. You said you got in where? Oh, you didn't get in, but whoever was in here. So you said that would be like the last line of defense. We would need to hold sell side. We can retest the original liquidity more than once in choppy conditions, right? The purge, revert, But as we said, if we're going to hold previous day's low, more than likely that gets acceleration, back-to-back bearish volume imbalances. If that stays open, that's going to be a premium that holds the bodies. Yeah, so you can see, right, the body's continuing to work lower. We'll probably get stopped to come for this low. That's fine. Now we're leaving the premiums, right? So this is just following the order flow. Very specific things. If we're going to invert this, we would immediately need to see that. Anything right back below that immediately throws us off sides. And now we hold and we run back for the low. So from here, right, if we're just going to keep chopping, you have to give it time to actually wait for the break. So we're not going to keep pushing. If we can close below that, then we'll look for lower prices and expect the bullish continuation, or the bearish, excuse me. But if we were to wick this low, I think we just keep chopping in here, to be honest. Wrong quick there, so I like that. Let's see if we displace away from the low now, right? Kind of like NQ. NQ held nicely. This is more of a bearish framework. I like that a little bit better because we have opening range. ES though, 4 hour. So we'll have to look at that. Close below. Yes, if we're going to close below 15 minute, well, wait, one more minute, 15 minute will close. It'll be 10:30. And now the morning range will be put into place. And as we often say, if the morning range lower high gets interacted with, price will tend to move in that direction. So we may leave a fair value gap here. This is where, like, if we did leave that fair value gap, as we said, that would be nice for bearish play into lows. No SMT or anything, so NQ and ES have both cleared the same low. If we do hold here, I'll give it another chance. All right, we'll take another short. And now we wouldn't want to see previous day's low be messed with at this time. It'd be a little bit large stop though. That's the only issue. I like the fact that we leave that 15, let's see, 15 closed, 5 minute closed. So yeah, we can use the low of the 4 hour. I wouldn't actually mind that for entry. To get these lows here originally as our new sell side. So pretty much just want to see now the bearish continuation. We'll partial here at this low. Becomes sell side as well. The stop loss is above this swing point right here, which is anchored within the original bearish fair value gap. So as we come up into that, we then trade below it. This swing point trades up into its consequent encroachment, breaks below it, breaking through the low. If we come all the way back up into here, we'll probably just return into consequent encroachment or attack highs anyway. So that'll be a good swing point. We'd want to see the low offer its sensitivity now if we're going to maintain this heavy delivery. Now that we have left the 4 minute close below it, or excuse me, the 4 hour, and now that we've closed below it with these higher time frame candles, we pretty much want to see that continue. Because in reality, right, this is on like a 1 hour chart. What we were talking about on a 1 minute with its delivery, right? The 1 hour lag that we've created here puts in that low. And then ever since this low, we've made no attempt to actually sweep any lows. So that low is protected, right? Every candlestick's low has been protected all the way up. And now that we've actually opened, we are trying to make an attempt down for some of those candlestick lows. That's kind of what we'd want to see, right? That's why we'd want the 4 hour to hold. If we end up inverting this 4 hour, we'll probably just continue to consolidate around equilibrium of the entire range, which is why we were expecting the choppiness, right? So if we were to take that most recent, let me hide the indicators. Boom. So the current pretty much leg that we were within, right? You take the high, you take the low. Midpoint of that is inside of this higher time frame. So when we're overlapping PD arrays like that, that's also why we expect consolidations. It's like for us, right? If we get stopped here, we'll just call it, because there's no need to be forcing entries. No actual entries for me today, just so you guys are aware. Everything here is paper. After having nice weeks, nice days, especially yesterday, catching the whole kind of bullish leg into high of day, there's zero need to try to continue to force entries to close out the week. Because then, right, let's say you had a good week and now you're actually pushing for entries in here and you end up losing, right? All you're going to think about all weekend is your last loss. Now it ruins your mood, ruins your week. So we said, this is kind of the original. We can come back up into that. Anything higher than that, I think price action here is just in a wash and we're done. No need for it. We'll just watch. So we need to break from here aggressively. Let's see. We're going to have two back-to-back bullish fair value gaps now as we've gotten back above the original sell side. Not a big fan of that. Those become discounts that we would have to invalidate and break below. But it's going to want to offer some type of support. So as we create this coming off of this bearish fair value gap, I would pretty much want to see the very next candle make an attempt. So like if we're going to close here, I would want to see this candle push right back below the fair value gap and this liquidity. If not, and we hold that, we'll probably make another attempt for this high. And as we said, just come back into equilibrium or break a high here, which at that point, that'll be a maybe true break-in structure. So we'll see what kind of setup gets formed there. We said would need to see a candle, pretty much disregard that. If we're showing any type of support here, more than likely it's going to want to make an attempt higher. It'd want to fall through that pretty quickly. Kind of like we see here, right here, aggressive. If not, high here, high here. Ba-da-ba. So we hold the discount instead. Body closes on the high. Body tells the story to me. If bodies are making an attempt higher, probably going to want to come up before this high. We do have a bearish volume imbalance. So if we want any hope, this bearish volume imbalance would have to pretty much remain how it is. And then we need to see, as we're talking about, that bearish displacement right under this discount. If we keep playing here, especially now, right, like we don't want to see that at all. You don't want to see price showing any type of support within these discounts, because that is more inducive of another run higher. You want to see price pretty much disregard these, close below them. That's the original liquidity. That's going to be a pretty key area. So if we tap that and hold this fair value gap, the next candle will probably stop us out, right? Just like that. Yeah, perfect delivery, especially right, not random, perfect delivery into the original liquidity. So the wick does the damage, body hesitates. Yeah, body doesn't even want to mess with that. So I'd watch very next candle here, probably run straight into stop loss after something like that. Yep, not surprising. So as we say, once you kind of understand, you understand when you're offsides, what kind of signatures you don't want to see. And that right there, kind of textbook. Right, we create the premium above the original liquidity. That's going to be our new area of support. I mean, perfect, absolute perfect delivery into that body tells the story, does not even want to return into the actual fair value gap after this candlestick did. Right, so bodies continue to get higher and higher. Boom. And now we get the high. He says still 92. This man's just saying random numbers out here. I love that. 93. 91. 90. Swing high. Let's see what we get. Previous day high as well. Same idea. Same level. Still no entries. This one might set up an actual entry, actually. Ooh, no closure above. I was like, if we closed above that, I might actually try to enter with the funded here. That's pretty keen. Now we got the 1, 2, 3 drives. Yeah, let's see if we close above here. 1, 2, 3 drives. Because this is more of an A+ setup for me. Right, true breaking structure. Wait for the closure above. It's all about picking and choosing. And right on a higher time frame, yeah, 5, 15, closure below, completely invalidating that structure. So I like that. We'll probably just run though. I have the entry on the previous day's low here. But if we get into the high this 4 hour first, I'm just gonna pull it. Yeah, at the extreme of the range as well, right? We clear that liquidity. So I like that. Use the low. Let's see where we are. Yeah, that's nice. That's a breaker unicorn. That's that unicorn model, to be honest. All right, if you're gonna create a breaker with the fair value gap, that fair value gap should hold. As we clear liquidity inside of a higher time frame discount with buy side left behind. Yeah, I don't mind that. We'll actually just use the breaker high, to be honest. Low hanging entry. The actual fair value gap right here. And that original sell side. Okay. Oh. So that's how I have the actual entry set up. This will be the only one for today. So we'll see if that plays out. If we just run straight into it, we'll be done. And that'll be kind of an example of a missed move, but no harm, no foul. Opening range gap. So we're turning into that. This one, yeah. I would. Only thing I'd make it better would be if we were already trending, but right for me, I'm fine taking that. So as we look at this, right, Continued bearish momentum following 10 o'clock open. We make a pass at the original liquidity. We displace through that liquidity with a bearish fair value gap. That should be where price wants to remain bearish, which is where we try the short for the paper. We displace that, creating the discounts, getting back above the original liquidity, purging and reverting, creating discounts along the way. Perfect retracement into the original liquidity, not one tick lower, not one tick higher. Holding the bodies away from the fair value gap, indicating price does not want to remain bearish. Displacement above previous day's high, displacement above the breaker high. Closing above that with an actual volume imbalance, so leaving a discount in wake of the premium. So yeah, I don't mind that, right? I'd enter that 10 times out of 10, and if we lost that, loss is a part of it. I don't expect to win every time. But when the edge shows itself, we'll take it. True break in structure as well, here and here. Only thing you have to be worried about is the higher time frame, 8:30, and the opening range gap. So that's going to be an area of resistance, which is why we see price now breaking lower. But if we're going to want to get this entry, we do want to see a retracement and a swing high being put in place that you can then target. The one good thing is that these highs here are equal highs now. So we do have buy side sitting up there. Which is why, yeah, we'll try to enter just on the high of that. We'll put this one in here with the legit. That's the only entry we have. And then we'll just try to get the first presented. And at this point, it's 10:45, so yeah, we should be in and out quickly. We might hold that high here. Let's see if we get a wick into the fair value gap. So breakers highs here, right? That's what we're just traded into. We're trying to get the actual fair value gap. I'd be weak if it just rejected from there. Equal lows though, so it makes sense to try to run those. Oh, excuse me. Okay, so we get in there. Now we just wait and see. All right, first presented will kind of be the objective. Partial at buy side. See if breaker holds. So speed met with speed, but that's not very unexpected. On this up leg, all up close candles. So oftentimes as we retrace into that, it's going to be met with that same kind of delivery and speed, right? All down close. So I'm not too worried about that, because then it will allow us to kind of run with speed higher if we want to. If not, we'll just continue to fall through. I like the idea of holding that. So now we'd want to see pretty much, right, if we can get back above both the fair value gap and the breaker. As we speak about premiums that are created on the way down, those would be going to become areas of short-term resistance. We would want to see price make an attempt to trade above those. So first we need to get above the actual breaker. If we trade inside of it and can't even leave it, that is what we would expect to just continue to be like a slow run lower. We'd want to see a candle make an attempt to close above. Instead, now that we're hitting the high of it and rejecting, right, that's not a good sign, because there's that volume imbalance that's right here. So those, once again, that's kind of what we don't want to see in price delivery. So once you're in and you're following price, seeing how price is reacting at these key areas, right? So we want to see price get above. Now that we've hit midpoint of the fair value gap, mean threshold of the breaker, we need to see price, as we're saying, invalidate now the premiums. Like if that becomes a swing high, it's going to come back for these lows, and it'll probably just come back for previous days again. And we'll probably just start chopping. Either that, or we'll come all the way back down for a low. Yep. So as we say, premiums holding, you don't want to see premiums holding like that. You'd want to see them give way. 8 o'clock open. What? That's also what we were saying. The bodies are holding 8 o'clock. Volume imbalance still holding. Yeah, it's not good. Let's see what we get. Okay, so we are respecting midpoint. If we give up midpoint with a body, we're going to get stopped more than likely. Previous day's high there. First, as we said, stops below the most recent swing point here created on the original liquidity. If we come back for that, we out. So as we said, closure below. We closed below the fair value gap. So yeah, I'd watch stop now. Rejecting off opening range, holding 830, leaving equal highs. So just sloppy delivery. As we said, this would be last line of defense, this original bullish here. Da 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 da. Last line of defense, so we got to see, this is just an inversion, right? So as we trade up into this, that'd be nice and all, but unless we can close above any of these key levels, I'm thinking more so this is just an inversion test to break lower again, right? Especially if we hold previous day's low. Daily candle with no wick for Monday. Not seeing that. Yeah, I do. Right, we did that yesterday, to be honest. So it was like we get pretty much price action that is invalidating the idea of longs taking place, right? Like we're just holding all of these immediate rebalancing, so no inefficiencies, which means that it's just going to be a slow grind. And any attempt to go higher is getting pretty much rejected. So if that's the case and you're expecting that like the volume imbalance is going to be where price wants to break lower, as you trade up into that, you can offset your position and close one. And that's what we did yesterday, actually, as we were getting choppy. All right, so we can kind of show you what that is. If I'm doing something like that, I'm also going to be moving my stop, because more than likely that means that price ran against us and returned to our entry, giving us a chance, which means a new swing will be put in place like this one here. So we'll do this, just kind of try to show, right? Like say that we get up into that volume imbalance, we'll close one to just mitigate risk. And then our new stop can be this low. And then it will allow us to actually have less risk while still being able to profit on a run higher, but in an ugly market like that. Looks like as we traded there, you would be out of one, and then you'd be able to move your stop to this low, which we still will. But we want to see pretty much just continued bullishness. NQ holding midnight. NQ is holding first presented 8:30. That's 8:30 if you're speaking. Midnight's all the way down here. This is midnight. So nowhere near that really. Holding 8:30 though nicely. We'll see if it can't get above its previous day low as well. Same in ES. Right, now that we're here, we want to see the expansion. Midpoint. My fault. I said midnight. Maybe if I could read. Learn how to read. So same idea. We'll just close here if we can get up there. Now we've had a mitigated stop. As we said, that was the last line of defense. That low should be protected. It never gets traded into. That's nice. So let's see if we can't get the displacement away. That is what ended up holding, right? This low is protected. Here's the sell side. That sell side we don't want targeted. This is where it's going to be an issue. Was 5 handles. We should have closed like right. Honestly, I'd probably close right there. Ends model. We'll go like this though and just let it run. See if we can't get into 830. And then the highs, as we said, we have equal highs there. I like that, the equal highs. Always, right? That's why you don't want to manually close out, as we say. If you got nervous, this price was going lower and you tried to just close manually, now you're not involved. And that's something I've done so many times, which is why I've learned, especially in markets that are a little more tend to be range bound, to just commit to the idea. Cool. So there's that. And then I'm just going to leave my last one on for the, just the first presented. So I'll show you the actual entry just because, right, I mean, like I said, that's the only trade we've taken today. So we're just going to get out up here. We've already closed half. Let me get in on that fair value gap. I'm using the breaker high. So as we trade into that, and then for me, just because we've already taken half on a Friday, I'm not even trying to get break even. So we could just go break even right away. And then if we get that first presented, we'd want to see the 830 hold. So we'll just leave it on this. I wish I was perfect, man. Just experienced, that's all. Striving for perfection, we'll never get it. But if we can get close, that's all we ask for. If you only had one setup, that's fair. Yeah, like one setup for life. Breaker with fair value gap, clearing liquidity. That's a good setup for sure. And right, this one holds. It gives a full deep retracement into the breaker. Like if we're in a trending market, it's going to use the high of that, like this. So in this one, we just get the full breaker retracement, which is just kind of indicative of that. I kind of want to go with, what's midpoint? I kind of want to get these highs up here. Oh, too slow. That's too bad. All right, that's fine. I was going to try to let this run a little bit all the way for these highs, but we'll just be out there and call it a day. Okay. Yeah, it's about to be 11, so I think we can get these highs, though. That's too bad. Too slow. We could just watch it run up for these highs, potentially. Can't lie, just for me to feel a little bit cheeky, I like to actually see this break lower from here. Let this be the swing high. Break lower, break back outside and consolidate, just for our personal benefit.
Cover and drop him back to hitting some.
Okay, I don't mind that. Let's break lower. Let's get the swing high exit. Nice. Count that. Equal highs, but we count it as swing high. We'll count the swing high. We'll see what this candle does, then we can count it. Sometimes, yeah. I only use them if we don't really have targets to aim for. Because most of the time, the deviations will just align with like predetermined areas in price, and I've gotten pretty good at just being able to see those. So like, let's see, like, right, if we're going to use deviations, we'd use the last move. So this move here that closes out that liquidity, you can take the highest high, the lowest low. If I brought up my projections, second standard deviation is opening range gap high. Right, so once again, as I was saying, they just align. I mean, third standard deviation is the midpoint exactly. Interesting. Right, so I don't use them for targets because I could see, like I would have the midpoint as an objective. I use it more for confirmation, I guess, is what I would use it as. So like say that we were long here and I wanted to hold like a whole daily trade, which I wouldn't in this type of environment. But in trending markets, if I'm trying to capture like daily ranges, I'll use the projections as my exits to align with the PD array, right? So like instead of me saying, all right, where do I want to target? Well, I want to target just this high. I'd actually pull up the projections and I would see that, okay, well, the third standard deviation is the opening range gap's midpoint to a T. That's not random. So if I'm looking for a continued bullish delivery all day, that's where I would exit, expecting that to be hit. Right, same idea with the second standard deviation. How it's pretty much the high of the opening range right there. You're funded, let's go. Congrats, man. Great way to start the weekend right there for you. Enjoy it, remember what that feels like, but then come back and lock in because it only gets harder now. Unless you've been funded, but if this is your first funded, it's only gonna get harder. Yep, go slow, right? No need, it's not a race. If you make $100 a day, that's more than most. Who are you with? You don't mind me asking. Nice, so we do get swing high. We would expect, as we spoke about, this is also another one, right? So if in true trending markets or like buy profiles, breakers turn into the mitigation blocks that hold us. So the breaker we hold as we clear a high, that now becomes the mitigation block. And if we're truly trending, mitigation block holds. And then price continues to run. So we'll watch that. True. It's not a bad idea in numbers. Just added benefit, right? Added stability. Because yeah, I mean, just speaking from experience, like I think it took me three fundeds actually before I got a payout. So I passed my first funded. This was way back in the ancient days, my Forex funds. But back then it was a little different. Like the rules nowadays are so much easier. So like when I first passed that one, you had to trade 30 calendar days before you could even request a payout. And my dumbass did. I traded all 30 days. I had 3,200 in profit. But as I've said before, I didn't think I was a legit trader unless I could make more. So I full ported and lost all of it the day before I could take a payout. Waited a few months because I was so hurt. Started again, passed again. This time took it slower, but still was just nervous. Right, I wasn't comfortable yet trading the true funded account because in my mind I was like, wow, I could actually make money now. Whereas before I had almost got accustomed to evaluations. Didn't care if I passed or lost because it was just right, that sim. But then once you get funded, even though it still is technically a sim environment, you have that realization that you can actually start making real money. And for me, that was just too much at the time. But hey, it's all a process. We got there eventually. Third time's a charm, I guess they say, huh? That's the sign. Nice. I just love seeing that. I just love catching the swing highs. That's exactly what we did yesterday too, actually. Yep, I had that same email hollow. And that was because, right, of the evaluation thing, the evaluation ban. They were asking for like 10 days of all your entries and your signals, recorded entries and exits for the next 10 days. Nah, I'm done, Mia. Mike. Sorry, Mia. What, Mike? You don't even need to get a payout. That's the thing. They're mostly just doing it for everybody. Like, I know people that had payouts that didn't have payouts. Right, I've got paid out through Apex, so I'm guessing that's probably also why I got it. Because I flipped the evaluations to get to the payout stage. So I'm guessing I was like flagged as whatever. whatever their new system is. But I mean, even people that have never got a payout, if they deem their trading or their evaluation trading to be risky. But like, what is risky, right? At the end of the day, it's all kind of nonsense in my opinion. I'm going a little bit away from Apex. Yeah, they did for me, right? So like I'm able to get evaluations and stuff now again. I was more so just on like that probationary period. But I don't know if I'll attempt for them right away just because the issues, I wouldn't say issues, but just not as clear and simple as some of these new prop firms, right? Like my funded futures, Top Step, even that new one that came out, what is that? I see a lot of take profit trader. I think there's better stuff out there that I will be attempting. I still like Apex though. I think it's nice for like, once you figure out how you know to trade, or like once you learn to trade, Apex is the best for, I guess, increasing that leverage quickly. Because no one else lets you have 20 accounts. That's kind of crazy. It's kind of also why they run into issues in my opinion though, but at the end of the day, we'll see how long that's sustainable. Exactly right. But you'd be surprised at how little people actually do that. I think you see it more on social media than what's actually occurring. Not many people are full 20 porting Apex accounts and making millions. Yeah, I was lucky hauler because I do this, right? Like pretty much every day. Oh yeah, sorry David, I didn't answer you, but yes, on every day I'll probably be here most days. But for me, I was kind of lucky because I already had, like, I record all my trades anyways. You know what I mean? So I didn't really have to change much. I just had to send them that. But the monthly cost to trade 20 accounts, if you're doing the monthly payment, it's going to be like $2,000 over that. If you're going to do the one-time payment, that's also where it's a little different because they just changed their activation fees too. So like that's another thing with Apex is they're changing their prices so much. Like sometimes activation fees are 80, 85, sometimes it's 120, sometimes it's 140. So it really varies on, I guess, what the current promotion is. But let's say that you're going to do 20 100K accounts and activate them all. Well, once you pass, the activation fee is probably like 120. So you do that times 20, which is whatever that is, 2,400. So it still is a decent investment, but like I said, that's why it's more so for seasoned traders, people that have already kind of proven themselves and they're just looking to quickly accelerate their profits. So there's that second standard deviation. Let's just deliver that to a tick. How about that? Just for fun, just to show the precision of these concepts. Look at that. So there's second standard deviation. Oh my, it's a very random area and price that we've delivered into. And now we've traded up and through it, right? The first pass was exactly at that level, just nice. So yeah, okay, now we might be able to actually just keep running bullish. Trailing drawdown, stupid rules, restricting pay, yeah, numbers. There's just so much. That's why in reality, like prop firms should be used to build personal profits, and then you should trade your own account at the end of the day. That'll provide the most freedom. And the reality is you don't even need that large of an account because, like, sure, you're trading $100,000 account, but what are you actually trading? More like a $3,000 account, right? Because that's all you can lose. It's like, yeah, the number looks good on paper, and that's also why, like, I was enticed, right? Like, oh, I'm trading 100,000. I'm a 6-figure funded trader. Whereas the reality is not really, like whatever the drawdown is, that's really all you're allowed to trade. So you're more so a $3,000 funded trader, which still is good, right? Like nothing to scoff at, but I think that's also why so many people blow up accounts is because they're trading them as if they actually do have 100,000 instead of using their drawdown to base their risk off of. 6-figure funded chairman, yes sir. That was all the rage back in the day. It's gone away a little bit now because people realize that that really means nothing being a 6-figure funded trader. Like early on, that used to be in there. Even I had that 6-figure funded, baby. Multi 6-figure funded. Try to flex it. It's funny. Just funny to think about. Live and learn, you grow. What time is it? 11:07. All right. Well, as I said, we're just yapping at this point. Kind of just want to see what other objectives are being met. As we said, today's first presented was our final exit, so that was nice. That's first presented. Entry on the breaker. Breaker. Top. Gotta take a picture of it. Top right. Make it bigger. 16. Top left. There we go. Yeah, that's good there. Screenshot. Whoa. What just happened? Only valid if it's 6 figures of drawdown. Yes. Very true. That's at the end of the day, that's true. Like you could say someone with a $10,000 live account is really more funded than someone that has, right, $300,000 in prop accounts. Whoa. What's happening? Why is my thing acting up, bro? Ah, there it is. Okay. Consolidation. Yeah, we'll wrap it up there. All right, everybody. Well, good week overall. If there's no questions, we'll slowly start wrapping it up. As far as next week, we're going to be back on Monday. Or actually, no, I'll be gone Monday. Let me double check the charts here. Back to the news. Okay. So I'll be gone Monday. Pay attention though, I guess follow me on Twitter because I may still stream on Monday. It'll just be from my laptop, so it'll be a little bit different, but if I still want to get the stream in, we'll just have to do it on the road. So Monday, potentially, for sure Tuesday, for sure Wednesday, Thursday, and Friday as well. Primarily, yeah. Mostly it's only ES. Every now and then I'll do NQ. Like I did one this week, actually. I don't know if the executions will stay up that long or not. Oh, no, okay. So like I did take a short in NQ. But the execution, they kind of get wiped at the end of the trading day, every day for the accounts here. Yeah, this one short. So I shorted that fair value gap as we were breaking lower into the low of day. But I would say 95% it's going to be ES. Just because I've learned over time that for me, it just moves a little bit more precise, right? So I don't need to capture like large ranges. Like NQ sure moves more as far as handles and points. But at the end of the day, it's really just off the risk to reward. And for me, ES gives just cleaner moves, right? I'm more familiar with how it's going to move and deliver. More consistent, so just personal preference. Yep. So we have kind of clear-cut ideas or when we would expect consolidations to occur. And as we said today, following a large range overnight, heading into the morning, we expect that choppiness, which is pretty much what we're getting here. And that's why you have to be very precise and demanding of your entries, right? So as I often say, I'm very slow and methodical to enter, but I'm very quick to mitigate risk and take profits. Right, so like in here, we were following it short, sure, but right at the time being, that's more 50-50. We're still at equilibrium of the range, so although that is a short that could play out, I'm fine missing that. Same here. This to me, right, is a very high probable setup because you can't really frame shorts out of this. Whereas like in here, you could frame the idea of wanting to go long, even down here originally, or excuse me, of wanting to go short, right? You can frame shorts here. Here you can frame shorts going lower, right? Even here you can frame shorts off these. But as soon as we displace above this high, it's very hard to frame any type of short idea that really makes sense based off structure. And to me, right, those are the high probability setups. So that's why that's the only one that we had today. And now price may run, but that's all we needed. Low hanging fruit, consistent base hits. So yeah, we'll close that for now. I think that we can, let's say that devil's advocate, right? If you're going to be around the rest of the day, that 4-hour high should be reached, in my opinion, I feel like, here. Yeah, for the most recent swing point, especially if we were to get above first presented, which we have. So I think at least these highs, right? From there, I'm not too sure, but first presented, almost just like this. Forced entry like that. Bang, bang. Cool. It was a good week overall. Right, we just got monetized on this channel as well, so appreciate all of y'all that have been hanging out with us the last few weeks in the live streams. You guys have helped out a lot. We have like memberships and stuff. I don't know if I'll ever do that. That seems like Twitch type things. Maybe in the future, if we want to have like specific member only videos. I might follow this actually real quick just to see, just tape read that. Yeah, it won't be anything crazy. It's more so like a shield for it. I guess it makes sense on Twitch, but for YouTube, it's funny. If I did do it, like I said, it'd probably just be for access to like extra videos and whatnot. Yeah, okay, so that should hold, right? Look at how the candle bodies are respecting. If we're gonna get above it, trade back into the discount, the original bullish here, get above. Yeah, we would expect that to hold into the buy side. Make us hold up. That's actually fire. I might need to do that. Damn, that is true. Maybe I could do it just so you can get the emotes. I forgot you'd have to make your own emotes. I wouldn't even know how to do that. That'd be funny though. The coffee, I can make like, what other emote would make sense? I'll make some emotes of my cats. All right, well, we're getting a little slow here, so maybe we just wrap it up. Yeah, all right, we're content. Content with enough. So I guess we'll just do a quick little recap. For us, large range overnight. Right, so large overnight range will tend to lead to choppier mornings as we're seeing. So we expect a consolidation, which means you have to be very demanding of your entries. We have to wait for kind of true confirmation. As we open up here at 9:30, we understand we have high impact news at 10 o'clock, so we're not even going to do anything until then. 10 o'clock creates a little swing point high. So at 10 o'clock, we create that high. That high stays intact. We then break lower off of the 1 minute inversion. We hold the bearish fair value gap, break lower again, attacking sell side here. We give a slight retracement, breaking lower again, clearing now the new sell side. All right, so at this point, we've 3 drives lower into sell side, into a higher time frame inefficiency. We then displace back above the original sell side pool, leaving a 1 minute fair value gap. That was our original kind of area of interest. Price returns into that beautifully and then displaces above this swing point, creating and validating the breaker. So once we do that, after clearing, once we do that, that's the break in structure. We have cleared all of the liquidity lower. We have left buy side now on the way down, and we've basically cleared, right, an intermediate swing point. That's why once we create the breaker, we're fine trusting that now this low, and really this low here is the protected low. So as you saw, we go in just like that, stop underneath to target here. Got kind of close to stop out, but we trust this, right? We trust that the breaker will hold the candle bodies. 1 wick just outside of it, but then from there, all bullishness. And we ended up first parceling at a first presented swing point and then final exit, just as we ran the 10 o'clock high. So nice little ENS model, right? A little bit more than that, actually squeezed about, what, 13 handles out of that. So that's plenty for us on a Friday. And now we'll just let price meander. So until we come back on Tuesday for sure, follow my Twitter or I guess Discord if you want to have the updates for the potential Monday stream. But if you're not going to be there Monday, we'll be back Tuesday at 9:25 Eastern. So until then, have a good rest of the weekend, everybody. Enjoy it. Be safe. And we will talk next week. See you guys. I won't be here Monday, sorry. So I'm going on vacation this weekend. Right, so if I do it on Monday, I'll just do it from my laptop. But I'll let you guys know. So as I said, follow my Twitter. That's linked in the description here to stay up to date with that stuff. But all right, everybody, we out. Have a good weekend.